Hey guys, good evening all. Welcome to your no schooling session. In today's session, we are going to see 10 things to look on for in a company or in a stock before investing. Now, this session or this fundamentals can be useful and beneficial for a beginner or for an intermediate level or an expert as well, right? Before getting into the 10 things, I'm going to explain the basics of share market, right? The fundamentals of share market, what exactly stock market is, how does it works, and who all are the regulatory bodies, or who all are the people or stakeholders of a stock market, right? And yeah, let's begin. Okay. So topic is how to pick stocks, part 1, right? I'm going to make more videos on share market, right? But I'm going to give those sessions in parts like part 1, part 2, part 3, and so on and so forth, right? So key terms to understand, right? First, stock market. Stock market is a place, market, where all the financial securities like shares, bonds, commodities, gold, etc. are traded, buying and selling. Simple, right? Stock market is nothing but a market or a place where different types of investors, be it retail investors, be it institutional investors, buy and sell, transact securities which can be shares, which can be commodities, which can be corporate or government bonds, right? And so on and so forth. So the definition is very simple: a market where investors transact or trade by buying and selling financial securities or financial instruments, right? Second, SEBI, Securities and Exchange Board of India. Now, what is SEBI? SEBI regulates and control everything in the security and commodity market, right? Now, let's understand what is security market, right? Now, all the financial securities or all the financial instruments which are not found in nature, right? For example, shares, bonds, financial derivatives, then NFTs, and so on and so forth, are all the assets which falls under falls under security, right? And commodity, on the other hand, is nothing but all the assets or all the commodities which are found in naturally, right? For example, gold, silver, iron, and so on and so forth. Those are the commodities which belongs to commodity market. On the other hand, shares, bonds, and derivatives are financial instruments which belong to the security market, right? And SEBI is nothing but the regulatory body which controls and decides decides or decides by law what are the things to, or what are the rules, or what are the law to implement in the stock market, right? Now, those law or those rules can be for everyone, right? Stock brokers, then retail investors, financial investors, institutes, then and so on and so forth, right? Third one is stock exchanges. Stock exchanges is nothing but where buying and selling of securities takes place. For example, NSE, BSE. Stock exchanges are nothing but the buying and selling of shares or any kind of financial securities or financial instruments that take place is called as stock exchanges. For example, NSE, National Stock Exchange, and BSE, Bombay Stock Exchange, right? Fourth, primary market. primary market is nothing but where securities are created, like shares are issued, IPO, initial public offering for the first time. Very interesting and very kind of booming, right, in India. All the startups like technology startups, Oyo, Paytm, Nika, then so on and so forth are, getting are releasing their initial public offering IPO after a decade or more, right? So primary market is nothing but the market where private companies enter into the public markets, right? At the very first time, the private companies has to, kind of issue shares for retail investors or institutional investors, right? So, for example, if Harshad wants to buy a lot of XYZ shares of PTM, then for the first time, then while PTM offering its IPO, Harshad will buy the shares or the lot of the shares from the primary market itself, right? Where shares are freshly issued, right, for the investors. So primary market. Second is nothing but secondary market, where all the stocks of the companies are traded. Simple. Secondary market is nothing but where all the companies, be it on NSE or BSE, are traded or are listed, wherein investors invest in those companies or trade on daily basis. That is the secondary market. NSDL, CSDL, depositories where shares are held in the demat account. Demat accounts of all types of investors are maintained by NSDL and CSDL. Now, let's take an example over, right? Now, for example, if I am a trader where I do intraday, right, on daily basis, then I have to hold my position, right, in order to trade, right, for the market timings, right, from 9:30 to 3:30. But if I am a long-term investor, for example, and I want to hold the shares or hold the stock or hold my portfolio, then those shares are holded in the demat account, which is, by the way, managed by NSDL and CSDL, right? Simple. Institutional investors. Simple. All the investors which do not belong to public investors or audience like you and me are the institutional investors. These are nothing. These investors are nothing but a group of people managing some kind of funds or managing some kind of money of people, right? For example, all the mutual funds, hedge funds, venture capital, etc., include institutional investors. Simple. Retail investors are nothing but people like you and me, general people like you and me who invest directly or through a brokerage firm or a discount broker like Zerodha, Grow, Upstocks, Sharekhan, and so on. Next, brokers. Okay, so there are different types of brokers, right? There are almost 4-5 types of brokers, right? In that, the first one is stock brokers. Second one is discount brokers, full service brokers. Example, Zerodha is a stock broker. ICICI is no, Zerodha is a discount broker. ICICI is a stock broker. Also, they have their own kind of mutual fund. Sharekhan is again stock broker plus discount broker, right? So yeah, this was the entire picture of the stock market or capital market, right? And all the stakeholders which are there in the stock market or capital market. Now, coming to the important part, right? Now, while selecting or while picking up stocks for investments, there are primarily or fundamentally two analyses to perform for any company, right? The first one is fundamental analysis. Second one is technical analysis, right? Now, to my definition, Fundamental analysis is nothing but everything which is not visible on the screen. Okay, for example, let's say Reliance Jio is or Reliance Industries is launching a new product or a new business division, for example, renewable energy, right? Now, these are the fundamentals of that company, right? Second example, Reliance Jio is increasing their price or shooting out their price up to 50 or 100 rupees, right? The, the recharges. These are the fundamentals, right? Or third one can be, for example, Prime Minister Narendra Modi launched PLI scheme for subsidizing electric vehicles in India. These are the fundamental analysis or fundamental part of the company, which, by the way, does not appear or is not visible on your screen, right? Fundamental analysis is, are non-numbers, right? Non-numbers, right? On the other hand, second one is technical analysis. Technical analysis is nothing but everything which is visible on the screen, right? For example, let's say I want to analyze a balance sheet of Tata Consultancy Services or Infosys, right? Technical analysis. Or I want to analyze or check out P ratio of Adani Ports and Sales Limited, whatever. So these are the technical aspects of the company, right? So these technical aspects are available on your screen, right? Let's take another example. I want to check operating history of Tata Motors from 2010 to 2020, right? So I can check on my phone or on my laptop or whatever, right? So these are the technical aspects of the company, right? Be it in terms of financials, in terms of different types of ratios, be it in terms of income statements, profit and loss statements, quarterly, annually, and so on, right? So these are the two types of analysis. Number one, fundamental analysis, and second one is technical analysis, right? Moving to the important and today's topic, right? 10 things to look on before buying stock. So first one, operating history. Check 11 years of operating history of the company, if any, right? Check how the company handles the upstairs and downstairs. Check the average return on equity for 11 years, if any, again. Second one, growth. Check if the company has grown 2 times than the GDP of the country. For example, if India's GDP is growing at 8%, then the company should be growing at 16%, which means the CAGR, compounding annual growth rate of the company, must be over 16% or 16 plus percent, right? For example, India's GDP is growing at, let's say, 7.58%, right? Then the company or the stock you are looking forward to invest in, let's say, is Reliance or TCS or Tata Power, Tata Motors. So you have to make sure, that all these companies are growing at least 2x or 2 times than the overall GDP of the country, right? Third, management. Research on CEO and management, specifically CXO level, right? Very important. As an investor, be it a retail investor or institutional investor, you have to know who are the management, what is the management, who are these people, do they have any purpose or do they have any long-term vision for their company, do they have any plans for the companies, what are their values, what are their past history, track record, or how well they have performed until now, right? And so on and so forth. Research background of the management in terms of example, education, experience, qualifications, and so on. check what future plans does management has. For example, now let's say Reliance Industries, right? Now, me as an investor will check or will analyze, does Mr. Mukesh Ambani ji has future plans for Reliance Industries? Then I will research on it, right? Then after researching, I will find out that yes, of course, Reliance Industries has future plans. They are looking forward to invest in renewable energy, then in operating systems or smartphones. In fact, they have declared or they have revealed that they are, they are investing 75,000 crores for the next 5 years for their renewable energy arm or renewable energy division. So me as an investor will get a green signal to invest in Reliance Industries. So this point is extremely important to understand and to analyze. Check teamwork of the management. Check teamwork of the management, how they are working. Is there a teamwork? Is there a spirit to make the vision a reality, and so on, right? Honesty, integrity, and values of the management, very important. How honest they are, and are they, dropping their salary or enumeration more than expected, right? For example, let's say there is a CFO, Chief Financial Officer of company XYZ Limited. Then you have to check what is the enumeration of CFO, what is the enumeration of CEO, CTO, right, and so on. Then stock buyback from market. Research on this point, and the point is, if the management team is buying stock of their own company from markets or from, let's say, their employees, or let's say from retail investors or institutional investors, then there is a green signal that these people or management believes in the company and believes that the company will go longer and will perform very well in the future, like 2 years or 3 years, 5 years, and so on. So if management is buying stocks from market, buybacking the stock from market, then make sure to give a green signal for it, right? So fourth point is debt, right? Check if the company has zero debt borrowings, which works wonders for the shareholders. Now, let me explain this point quickly, right? Now, if the company don't have any borrowing liabilities or debt on the shareholders, then the thing is, dividends, right? If the company do not have a debt, then shareholders get dividend from the company, right? And not and the company does not pay their EMIs or their interest on loans, right? And for example, TCS have zero debt on themselves, right? Check debt to equity ratio, again very important. Fifth point, promoter. Check if the promoters of the company has an ownership of 51% or more. Very important, super important. The best example I want to give is Reliance Industries. Mukesh Ambani and their family has an ownership of about 51-52% of their company, right? So second one is, I think, Wipro. Mr. Azim Premji has an ownership of 70% of the entire Wipro group, right? So it is a green signal to invest in such companies, because the owners, the promoters are owning more than half of the company, right? 51 or 51+%, right? So the owners or promoters believe in this company and they really care about this company, right? So make sure to invest in such type of companies. Research promoters' vision and mission for the company. Yeah. Check if the promoters are buybacking more stock from the market. Again, same, right? Sixth point, net profit. Very important. Now, what is net profit, right? Let's take an example. Company XYZ, right? Invested 50 rupees, let's say, or the cost was 50 rupees to generate a turnover or revenue of 100 rupees, right? So, company XYZ made a profit of 50 rupees. Okay. Now, 50 rupees is the gross profit, right? Now, after making a 50 rupees profit, company has to pay some taxes, right? Taxes to the governments, right? Now, let's say company XYZ pays 10 rupees in taxes, right? So, the net profit is 40 rupees, right? So check if the net profit of the company is growing at 25% annually, right? Now let's say company XYZ in its first year made a profit of 40 rupees, right? Then you have to make sure, or you have to analyze or research that company XYZ made a profit of 25% extra, right? For example, if my company's net profit last year was 100 rupees, then this year the net profit should be 125%, which is a growth of 25% in a year, right? And so on and so forth. Analyze 10 years profit history of the company. Very important. 7, revenue and unit sales. Check if the revenue and unit sales is growing at 10% annually. Very important. Let's take an example, right? For example, our company is making this bottle, right? Now, this bottle is equal to 1 unit of sale, right? Now, let's say this bottle's price is 10 rupees, right? Now, our company sold 10 bottles in the previous year, right? Which is a revenue of 10 to 10, 100 rupees, right? Now, you have to check if the company is growing at, the company's revenue and unit sale is growing at 15% annually, right? Which means that in this year, the revenue should be 115 rupees. Last year was 100 rupees. So the 15% growth, which means 115 rupees, right? But growth in revenue, 15%, and right. Now, unit sale is nothing but if we sold 10 bottles last year, right? Then check if the company is selling 11 or maybe 12 bottles this year, right? Which means 15% growth in unit sale as well as revenue, right? Very simple. And very important for manufacturing businesses like Tata Motors or Tesla and so on, right? Analyze operating activities. Very important to analyze all the operating activities of the company, right? All this, all this analysis, you can analyze all these things using different platforms like Investing, Screener, or Zerodha, Grow. These apps provide a very interesting and very interactive, UI for analyzing the company, right? In terms of technical aspects, right? 8 point, net operating cash flow must be growing at 20% annually. Analyze cash from units sold. Very important. Net operating cash flow is nothing but, let's say, the company made a turnover of 200 rupees and the cost was 100 rupees. So 100 rupees is the cash flow or cash from operating activities, right? So you have to analyze the cash from activities and cash from financing, or cash from cash from unit sold, right? Ninth one, a return on capital employed. Let's understand this first, right? Capital employed, capital is equal to loan plus shareholders fund, right? Now let's say I'm kickstarting a company and I need 100 rupees, right? So I finance my company for 50 rupees, right? And I invite three investors to be my shareholders, and I insist them to invest 50 rupees in my company, which comes to 100 rupees, right? 50 plus 50 is equal to 100, used for business. And after the year end, the company made 20 rupees profits from 100 rupees. Then I got that 100 rupees. I invested in my company. I worked very hard with my team or with my employees, and after the 1 year, at the end of the year, we made a profit of 20 rupees, right? The cost was 100 rupees and we made a profit of 20 rupees, right? So the capital employed is 20%, right? Simple. Now let's take an example over here. Reliance Jio, right? 2020, Reliance Jio's overall expenses was something 50,000 crores, and revenues were 58,000 crores. So the capital employed is the profit, right? 8,000 crores, right? And the return on capital employed should grow at 20% annually. Very important. 10th, return on equity must be 15% annually. 15% or more than 15%, good and well. Return on equity is nothing but, let's say I am the shareholder of company XYZ, okay, and I have invested 1,000 rupees in the previous year, which is 2020, 1,000 rupees. So me as a shareholder or me as an investor have to make sure that I get 15% return on my equity, which means on 1,000, 15% means 150 rupees, means the value of the stock which I bought for 1,000 is now worth 1,000 or 1,150 rupees, right? Very simple. So yeah, these are the 10 points. I have added a complimentary for you, by the way, and the complimentary is tools for fundamental analysis. First, I prefer money control. Second, I personally prefer screener. Then tools for technical analysis. Our team prefer investing and I prefer e-signal. Okay. Free courses for beginners, Zerodha, Varsity. Very important to first of learn, first of educate educate yourself, then enter into the field of investing, right? So I think Zerodha Varsity as a beginner is very helpful and very kind of useful for you, right? And finally, apps to kickstart investment journey. First one I prefer is Zerodha. Second, Grow. Third, Upstocks. Fourth, Angel Broking, and finally, Sharpen. So yeah, I think we have done. And yeah, so I'm attaching the link of this document in the description of the video, so you can download it and have a look on it, right? So yeah, I wish you all the best for your investment journey. Thanks.